right, everybody. Welcome to today's webinar. My name is Jerry D'Ambrosio. Great to be here with you guys today. Hope everybody's doing well. We have a pretty full room here today for a midday on a Wednesday. Hope everybody's doing okay. Do want to do a quick sound check just to make sure everybody can hear me okay. If you guys don't mind, just use that chat box. There we go. Donald says audio and video good. Edward says good afternoon. Larry says yes. Bruce says loud and clear. Fantastic. Welcome everybody to today's webinar, How to Trade Like the Pros. Before I officially get started, I do ask a few things of you guys. Number one, grab a pen, piece of paper, something to drink, of course. I definitely want you guys to grab a pen and a piece of paper. Somebody, if you would, grab a pen and a piece of paper, because I'm going to ask you guys to write a few things down in a little bit. Number two, just get rid of any distractions. Close your office door. I've been working from home lately, so I'm not really in an office anymore, but when I was in the office, anytime I'd listen to a webinar, I'd always close my door. I'd keep my cell phone on the other side of the room, of the office, so that I'm not distracted, so that you're ready to learn. You guys have taken time out of your day. It's noon here on the East Coast on a Wednesday. Nonetheless, to better yourselves as traders, I applaud you guys for that. So that's what you're here for. You're ready to learn. So speaking of what you're going to learn 5 common principles professional traders follow. I'm going to teach you guys an extremely easy and effective short-term trading strategy. And then finally, how to quickly and easily identify the best trades. And just as a thank you for sticking with me to the end, I have a lot to cover here today. I really want you guys to stick with me to the end. If you stay with me all the way to the end, we're going to be together no more than an hour. I'm going to share with you a copy of today's slides. Just somebody remind me at the end. I usually forget. Say, about 10 to 1 Eastern time, maybe about 50 minutes from now. Say, hey, Jerry, don't forget the slides. And I'll put them in the handout section of your GoToMeeting control panel. By the way, guys, I do have Steve Chappell in the background. So if you guys have any questions along the way, I have a ton of content to cover here over the next hour. I will save some time at the very end to answer some of the more common questions. But if you really feel like you have a question that you want answered right away, shoot it in the chat box. Steve will be there to answer any questions that you guys have. And again, I'll save some time at the very end to answer some of the more common ones. Okay? So let's start off by talking about what makes a pro a pro. So what makes a professional trader a professional trader? What are the qualities that separates these men and women from, the average retail investor? And this segment here is all about getting your mind right, all right? Getting in the right mindset, because this isn't your buy and hold retirement approach. Okay, this is quite different than that. This is for the capital that you have set aside to trade a little bit more actively. We hope you all are doing that. So you have your retirement portfolio, right? Those are your core holdings, your long-term, almost set it and forget it, quality stocks. The analysis that you do on those positions are really based on fundamental valuations, right? You're looking at the value of the company, maybe the price to earnings or the growth rate or the relative safety indicator within VectorVest, right? These are fundamental components that are really important for longer term investors. You might have money set aside to trade options. We have a lot of great options courses here. Maybe you've taken a few of them and you've implemented some of the techniques that Ron and Jim teach you in some of those option courses, but you have some money set aside to do that. You don't throw your entire overall investment capital to that one approach. And then, we're here, right? You have money set aside to trade a little bit more actively, swing trading, in and out a little bit more quickly, primarily using technical analysis to pinpoint entries and exits. Okay? So right out of the gate, know that that's what we're going to be talking about today, right? We're not going to be talking about, anything other than, shorter term swing trading. John says, buy and forget. No, thanks. Buy and hold, a little bit more longer term. You never want to forget anything that you buy, but it's more of a longer term play than what we'll talk about here today. So number one, professional traders are realistic. That they know that there's no magic pill that they can take that will make them better traders overnight. So if you ask anybody who's ever gotten to the top of their field, I don't care if it's business or finance or sports or construction, they'll tell you that it took effort. It didn't happen overnight. They put the time in, they put the effort in, and then the success will come. I always like to use the pro athlete analogy. You know, Michael Jordan became the best basketball player to ever live because he was the first one in the gym, the last one to leave. I don't know if you guys watched that special that ESPN did, The Last Dance, but he was brutal to his teammates. But it obviously worked, and he was able to achieve the success that he was looking for. He was always early in the gym. He was always the last one to leave. And when it comes to trading, you know, you have to put in the effort. You know, a webinar or two or maybe a course or two might not do it. You really got to put in the effort, and then you'll get to where you want to be. Next is that they control their emotions. This is easier said than done. This is a really difficult part of trading in general. They don't allow losing trades to affect them. So pros don't think of the money first. They focus on doing the right things, making the right trades, and they know if they do that, the money will follow. And one of the reasons they feel this way is because they place trades based on facts and data rather than gut feelings. You've all been there, right? You've all placed a trade or two because you just knew it was going to go up, right? You had that feeling. Well, pros don't think that way. They don't have feelings when it comes to buying and selling stocks. They look solely at information and the information in front of them to make their decisions. And they're prepared. They know exactly when they're going to get out of a trade even before getting in. I love this slide because when you get on a plane, what's the first thing that the flight attendants do before you even, before you take off as you're taxiing out of the gate? They go through how to get off, right? How to exit the plane in case of an emergency. And when it comes to stock trading, you need to have an exit strategy. So that's part of their preparation. They know when they're going to get out even before getting in. Can you say that? Can you say, I know exactly when I'm going to get out before you get into every single trade? And from talking to a lot of folks over the years, I'm going to say the answer to that is no. A lot of people struggle with when to sell, whether it's at a loss or at a gain. They don't have a plan in place. It's kind of, a little bit arbitrary sometimes, but that's again what separates retail traders from professional traders. And the reason they're prepared or they understand when to exit is because they've examined and tested different techniques to figure out which one is best. And lastly, and most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well and resilient when they're not. So they have a plan and they stick to it. I'm sure trading plans were thrown out the window in February and March of this year, right? You might have done so. You might have kind of just scuttled the ship and sold everything in your portfolios because you couldn't take any more pain, right? You couldn't take any more loss. Only to see the market rally and, you're probably looking back at some of the things that you sold and say, man, if I didn't sell, I would be right back to where I was. And maybe some people sold at the bottom. What I'm trying to say is plans were thrown out the window. And it has to do with a lack of discipline. I got an email from a subscriber a few days ago who said he was implementing one of the techniques that we've taught him in one of our various trading courses. And in the crash in February and March, he just stopped. He just threw it out. He just threw it out. It was down about 20 to 25%, and he just felt like he couldn't take any more. He then went on to say, if I only held on and stuck to the plan, I'd be in much better shape now than I was then. Okay? Now, what happens if you continue to struggle with some of these things? Now, you're going to go broke. Now, I don't mean you're going to be unemployed, living on the streets, but you won't be trading much longer. You won't be playing this game too much longer because losses will just keep building up and building up and building up, and you'll wind up broke with no more money to invest. If you start doing things the right way, correcting some of the mistakes that you've made in the past, particularly when to sell, letting emotions get in the way, not having a plan, or if you do have a plan, you don't stick to that plan. So if you start to correct some of these things, right the ship, so to speak, you'll know exactly what you're doing no matter the situation. And you'll just have tremendous confidence in your abilities moving forward. And once you start to develop better habits, you'll start to see more consistent gains. Now, there's a big mistake that traders make when first starting to implement short-term trading systems. And not just a short-term trade, a short-term trading system. A system that tells you when you should be buying, at what price you should be buying, when you should sell at a loss, when you should sell at a gain. That's an entire system of a swing trading system. Okay? There's a big mistake that kind of newbies will make when first starting to implement short-term trading systems. First, they follow unproven, complicated strategies. They feel like they need to use 5 different technical analysis indicators: stochastics, on-balance value, MACD, ATR, Bollinger Bands, moving averages. For some reason, new traders who are just starting out trading this way, they find value in complexity, right? The more indicators, the better the trade, right? That's what they're thinking. Most of the time, that's just going to lead to confusion, ultimately frustration. You're going to give up. You're going to say, this is not for me. And you're going to go back to kind of your, what you're used to doing. What I want to show you today is a system called the RSI-2 trading system. RSI-2 trading system was developed by Larry Connors. You may have heard of him. Larry Connors is an author, written many books on trading. He's a trader, obviously. He has over 30 years in the financial markets industry. This strategy focuses on stocks in long-term uptrends but are experiencing short-term corrections. So let's kind of understand that first. It focuses on stocks in long-term uptrends but are experiencing short-term corrections. Now, he defines that. And what I love about this system is that it's so simple. It only uses 3 indicators: a 200-day moving average to identify the long-term trend, and a 5-day simple moving average. Both of those are simple moving averages. And a 5-day simple moving average and a 2-period relative strength index, or a 2-day relative strength index, a relative strength index with a 2-day look-back period for the short-term trend. So let me show you how the strategy works. Here we're looking at Procter & Gamble. Now we're looking at it from November of 2018 to about November of 2019. Don't worry about the time frame. It's the technique. I'll explain why I went back this far in a little bit, and then I'm going to show you what the stock looks like currently. But again, it's the technique that I want to teach you here, and I went back to November of 18. Again, I'll explain why in a moment. So throughout the course of this 1-year period, great stock, right? Goes from bottom left to upper right. Stays above the 200-day moving average the entire time. But occasionally, it falls below its 5-day moving average. That's the white line running through price. Long-term uptrend, which is defined by price being above the 200-day moving average. But a short-term correction, which is defined by price moving below the 5-day moving average. Let me just make sure you guys can see my arrow the whole time. So long-term uptrend, short-term correction. And again, the short-term correction is defined when price moves below the 5-day simple moving average but stays above the 200-day moving average. Let's add the final layer to it, and that's relative strength index. RSI is scaled between 0 and 100, and the industry standard look-back period is 14, with the extreme lower level at 30 and the extreme upper level at 70. And we are using daily price bars here. We're not looking at an intraday chart. We're not looking at weekly bars. We're not looking at monthly bars. We're looking at daily price bars. So when we look at the relative strength index, it's when we look at the industry standard relative strength index, we're looking at a 14-day look back RSI with the lower level at 30 and the upper level at 70. Above 70 is considered overbought. Below 30 is considered oversold. And you can plot this on any stock. Go to any stock, plot the RSI on any stock. You could see what the movement looks like over time. Now, using the industry standard settings, you can see that the 14-day RSI only fell below 30 once in this almost, what are we looking at? Longer than 1 year period here. Now, just to show you, I went all the way back to May of 2018, because from November of 2018, which is right here, the RSI didn't fall below 30 at all. So that drop below 30 there on the industry standard setting was a great opportunity, right? You're catching it somewhere near that low point. What Larry Connors did, though, was he speeds up the indicator, meaning he changes the look-back period from a 14-day look-back period to a 2-day look-back period. And when you do that, when you adjust look-back periods on any indicator, you have to adjust their levels if it's an oscillator, for example. If it oscillates above and below 2 levels, and you have levels where you're considered overbought and oversold, you have to adjust those levels when you adjust the look-back period. So when he adjusts the look-back period from 14 to 2, he also drops the extremely oversold level from 30 to 10. Okay? So here's your system now. Along with the price of the stock above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI below 10, there's your trade. There's your setup. Okay? Again, price above the 200-day moving average, excuse me, but below the 5-day moving average, and the 2-period RSI below 10. Okay, follow my mouse. There's your setup. Above the 200-day moving average, long-term uptrend, but below the 5-day moving average and 2-period RSI below 10, there's your short-term correction. Here's what it looks like written down on paper. So here are our entry rules. We're going to buy, and I'm going to show you chart examples, guys, in a moment. Zoomed in, close-up chart examples of this system. Okay? The entry rules are: you buy only when the stock is above the 200-day moving average and below the 5-day simple moving average with the 2-period RSI below 10. And you enter the trade near the close of the day. Okay, that's very, very important in this system. You enter near the close of the day. And when I trade this system, I enter the position right around 3:55 p.m. Eastern time, right before the market closes, and I put a market order in. I don't mess around with limit orders, because if I'm getting in, if I put a limit order in and I'm trying to get in so close to the close and it doesn't fill, the trade's not executed. I want to get in. I see those things in place. Stock is above the 200-day moving average, below the 5-day moving average, 2-period RSI below 10. I want to get in as close to the close of the day as possible. Okay? And again, when I trade this, I'm in about 3:55 p.m. Eastern time. Here's our exit criteria. We will exit when price goes above the 5-day moving average. Remember, we are entering when it goes below. We are entering near the close of the day when it's below the 5-day moving average. We are going to exit when price goes above the 5-day moving average, and we are also exiting near the close of that day as well, whenever that occurs. Same thing, 3:50, 3:55 p.m. Eastern Time, put a market order in to get out. Okay? So I've just zoomed in on just a couple areas. I'm going to show you a handful, maybe more examples here. I've just zoomed in here on July of 2019. Now, notice we have price, right? Price is represented in candlesticks. The 5-day moving average is the white line, and the green indicator at the bottom is the 2-period RSI with the red dotted line. That's 10. Notice we can't see the purple line. Remember what that purple line was, right? The purple line was the 200-day moving average. We can't see it because we've zoomed in so close. But just know that when I'm going through these examples here, and we saw it on the long-term chart, that price was above the 200-day moving average the entire time. So we don't have to worry about that. We don't have to see it to know, we don't have to see the 200-day moving average to know that on July 23rd, 2019, price was above it. We saw that on the long-term chart. Okay? So let me talk for a second about the candlesticks as they appear in VectorVest. Okay? A filled candle, you notice you have a couple of different kind of candles, right? You have red and green, you have filled and unfilled. Let's talk about filled or unfilled for a second. Filled candle means the stock closed at the bottom of the body and it opened at the top of the body. Unfilled means it closed at the top of the body and opened at the bottom of the body. Red means it closed lower that day than it did the previous day. And green means it closed higher that day than the previous day. So the color has to do with where the stock closed in relationship to where it closed the previous day. And filled or unfilled has to do with where the stock closed that day compared to where it opened that day. Okay? So again, the dotted red line is 10. The green indicator is the 2-period RSI. The white line is the 5-day simple moving average. So on this day, July 23rd, 2019, we have a setup, right? Don't we? Price is above the 200-day moving average. We know it is. But it's about to close below the 5-day moving average. And the 2-period RSI is about to close below 10. Just barely, but it's about to close below 10. So we're going to enter. We are going to enter the trade near the close of that session. And for the purposes here, guys, I am going to use the closing price for each example, because I don't know what the price of this stock was at 3:55 p.m. Eastern Time on July 23rd of 2019. I do know what the close was, and it was 113.85. So shave a penny or two up and down, but we're going to use 113.85 as our entry price. And we are going to buy near the close of the session. We're going to put a market order in. Everybody with me so far? When do we sell? We sell 1, 2, 3 days later at roughly $114.73. Now, why are we selling on that day? Well, on that day, and that's July 26th of 2019, we're only 3 days into the trade, we see that the price of the stock is about to close above the 5-day moving average, right? So we sell near the close of that day. Price of the stock opened below the 5-day and then eventually crossed above it. We don't sell just as it crosses above the 5-day. We sell near the close of the session if we see that it's going to close above the 5-day moving average. And we sell at 114.73. Earlier I asked you guys that I'd like you to take out a pen and a piece of paper. Somebody do that for me now. I'm going to keep track as well, but I'd like somebody to keep a tally. Okay? Okay? Keep a tally. So that's one win so far. That's a winning trade, isn't it? Right? We buy it at 113.85. We sell it at 114.73. That's a winning trade. The very next day, we have another setup. Okay? Now, I'm not saying that on July 24th, the next day, that you're going to buy more of it if you bought it the day before. What I'm saying is, if you didn't buy it the day before because you didn't have any buying power left, or you weren't watching the market that day, or you were on vacation, or whatever the case may be, you didn't buy Procter & Gamble on July 23rd, but you saw that it set up again on July 24th. This is another setup. This is another opportunity. So if you didn't buy it the day before, you can buy it on July 24th at 113.85, and you're going to sell it a couple of days later at 114.73. That's another winning setup, isn't it? That's another winning setup. Moving from left to right. From what I'm doing, guys, is I'm not cherry picking dates here. I am literally moving from left to right. From July, now we're in August. August 5th of 2019. Was the very next setup after the July 24th setup. Is price still above the 200-day moving average? Is it below the 5-day moving average? And is the 2-period RSI below 10? It is. So we buy near the close of that session. How do I know that we're buying down there and not up here? Well, it's a filled candle, right? Filled candle. So we know it's at the bottom of the body. We buy at roughly 113.08. When do we sell? We sell 2 days later at 115.52. We see that on that day, August 7th, we're only in this trade a couple of days now. By the way, the average holding period for this system is anywhere between 2 to 5 days. That's the average. Sometimes it could be the very next day that you sell. Sometimes it could be longer. But the average is between 2 to 5 days. Okay? Why are we selling on that day? Well, we see that price of the stock is about to close above that 5-day moving average. So we exit. We exit at 115.52. That's another winning trade. The very next setup after that August setup was on September 10th of 2019. Price of the stock is still above the 200-day moving average, so it's still in a long-term uptrend. I can't emphasize enough how important that observation is, right? Why is it important that the stocks that we're buying here are in long-term uptrends? Number one, we are buying them as they're falling in price, okay? We're buying them on down days. We're buying them, as they're falling. But because these stocks are in long-term uptrends, the chances of these pullbacks being short-lived goes up, right? Is higher. I'm not saying that it's 100% of the time. I'm saying because you're in a long-term uptrend, pullbacks are shorter-lived. So that's what we're trying to do. We're trying to get these little short-term pullbacks within an underlying uptrend. So we buy this one at 119.88. We buy it near the close of the session. We sell 2 days later. Okay, we sell 2 days later at a nice gain there, 122.77. Nice gap up, nice close above the open, right? A little bit off of the high, but still, we see that the stock is about to close. That's September 12th, 2019. We see that the stock is about to close above the 5-day moving average. We exit at 122.77. It's another winning trade. Okay? October 2nd, 2019. We got another setup. Price of the stock is still above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI below 10. So we buy near the close of that session. That's October 2nd, 2019, at 121.08. We sell 2 days later at another nice gain, $124 even. Again, give or take a few pennies, because we're getting in right at the close. That's another winning trade. Okay. All right. A couple of you guys are asking about what do you do if the stock keeps going down? Okay. And let me show you an example of that, so to speak. Okay. So here on October 14th, 2019, we buy. Price of the stock is about to close below the 5-day and the 2-period RSI about to close below 10. Why didn't we buy the previous day? Why didn't we buy the previous day before that? Why didn't we buy the previous day before that? Prices of the prices closed below the 5-day moving average on all 3 of those days. But look at the 2-period RSI, did not go below 10. We need everything to be in place here. So we buy near the close of that session at 120.05, and we see the price of the stock fall. 1, 2, 3, kind of goes down for 4 days, and then it rises and eventually closes above the 5-day simple moving average, right? Well, it closes above that 5-day moving average at a price of $119.08. Now that's a losing trade. So while there's no, quote, stop loss necessarily, and by the way, Larry Connors developed this system without using stop losses. Your stop loss is essentially when price goes above the 5-day moving average, if that results in a loss. So I'm not going to say stop loss. I'm going to say with this system, your exit criteria is when price it goes above and is about to close above the 5-day moving average. Your exit criteria. That exit sometimes, not a lot, sometimes results in a losing trade. Most of the time, the majority of the time, it results in a winning trade. Okay? So your exit criteria, don't say stop loss. Your exit criteria is price is about to close above the 5-day moving average. Now that's a losing trade. I'm going to put a loss, a tally mark in the loss column. The very next day, October 15th, 2019, you got another setup, right? If you didn't buy it the day before, you had a chance to buy it on October 15th of 2019. Again, I'm not saying that you're going to buy more of it. What I'm showing you are setups. Every single setup for this one stock, Procter & Gamble, from July of 2019. And I'm not cherry picking dates. I'll explain a little bit more of that in a moment. But you got another setup. You buy it at 117.20. When do we sell? Well, in this case, we sell, at 119.08. Now that's a winning trade. Right? If you didn't buy it the day before, you bought it on the 15th, that's a winning trade. Got another one on October 17th. If you didn't buy it on either of those other 2 days, you had another setup. Buy it at 116.63, sell it at 119.08. That's another winning trade. A couple of questions are coming in, and I'm not going to answer them directly. I'm going to answer it more broadly. Some of the questions are, why not do this? Or why not do that? And the simple blanket answer to any question that starts with why not do this is because Larry Connors didn't develop the system that way. He developed the system this way. Why did he publish it this way? Remember earlier, what did I say? I said that professional traders are prepared, right? They have a plan. They stick to that plan. He obviously tested this system, I'm sure, dozens, if not hundreds of different iterations of it. The reason why he published it this way is because it worked the best. So a blanket answer to any question that you guys have as to why not do it this way or why not do this or anything along those lines is because he developed it this way and probably figured out quickly that those other things didn't work as well. Maybe they worked, but they didn't work as well. Okay? So how many wins and how many losses was that? How many wins and how many losses? That was 7 wins and 1 loss. 7 wins and 1 loss over the 8 examples that I showed you. That was from July of 2018. It's July of 2017, I think, right? Let me see. 19, I'm sorry. July of 2019 to October of 2019. That was only 7 setups. Okay, 8 setups. 7 wins and 1 loss. Okay, that's pretty good. Pretty good winning percentage. So I wasn't going to stop there. I wasn't going to come with you guys, come at you guys with a 8 sample size example, right? 7 wins, 1 loss. I can't boast too much about that because that's not enough. That's not a big enough sample size. So what I did was, I went all the way back to November of 2018, all the way to current, and I went through the same analysis. And over the course of November of 18, November of 19, so we're looking at 7, 8, about 16, 12, almost 20 months, right? Almost 20 months. There were 27 RSI2 setups. Okay, we know what an RSI2 setup is by now, right? Price above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI below 10. That's an RSI2 setup. There were 27 of them from November of 2018 to current. There were 24 winning trades and 3 losing trades. That's an 89% winning trade percentage, and one of those losing trades I showed you, right? There were only 3 times of the 27 setups where this system resulted in a losing trade. That's an 89% winning trade percentage. This includes, guys, the most recent 5 months. And why does it include the most recent 5 months? Well, here's an example or a chart now of Procter & Gamble. Notice February, RSI 2. No, not February, because February, when the 2-period RSI went below 10, that would have been a winning trade. But what about here in March? In March, April, May, recently, there were 1, 2, 3, 4, 5, 6 or 7 times when the 2-period RSI went below 10. Why didn't we buy, though? Because the price of the stock was in an underlying downtrend. So you may be asking, well, how does this system hold up in this type of market? Or how does this system hold up in a bear market? Well, it holds up well because you don't make any trades. Okay? Using the system as I laid it out just now, you don't make any trades. So you're keeping your powder dry. Okay? Again, now there were times when a lot of times when the stock was below the 5-day moving average and the 2-period RSI went below 10, but the price was not above the 200-day moving average. Therefore, we don't take the trade. So this sample size right here, the last 5 months, was included in my analysis, but there weren't losing trades in this area because there were no trades at all. We didn't take any trades. Okay? Kind of taking another approach here. Okay? What you're looking at here is a long-term portfolio from February 8th of 2010 all the way to current. And this trading system that you see here uses the same exact stock selection system that I just taught you. Okay? What is the stock selection system that I just taught you? It's you buy near the close of the day when the price is above the 200-day moving average but below the 5-day moving average and the 2-period RSI below 10. This system that you see here, that's up 642% since February 8th of 2010 all the way to current, uses that same exact stock selection system. Okay? The difference here in what you're seeing here is the exit criteria. Within VectorVest, there is no way to automate closing a position when the 5-day moving average is about to close above, when price is about to close above the 5-day moving average. Unfortunately, within VectorVest, there's no way to automate that. So when doing the research and learning this RSI2 system, I wanted a way to automate it within VectorVest. So the exit criteria that you see here is a little different. I'll explain in a second why I can't get into that, what the exit criteria is. But just know that this system uses the same stock selection methodology that I just taught you. It's up 642%, and I know what it's done recently. By the way, it doesn't use any market timing, and you're probably going to ask, why don't you use market timing? The answer to that is because it didn't test as well as not using market timing. Okay, so that's another answer to that. And I could probably say that for any question that you ask guys about why didn't you do it a certain way or a different way. You know, if I do a webinar, if Steve does it or Todd does it or any of us do a webinar and we present to you a trading system like this, it's presented to you this way because it worked the best. So in this case, using market timing, and I tried everything. I tried the primary wave, the green light buyer, the DEW, the confirm calls. I tried every market timing system, and it didn't work as well as not using market timing. Over the course of this, let's see, February of 2010, that's a little over 10 years, there were 213 winning trades and 17 losing trades. That's a 93% winning trade percentage. Okay, a 93% winning trade percentage. So I came up with this and I showed Steve, I showed Ray Clark, I showed Dr. Delito. We got into a room together and I showed him this, and Dr. Delito was just like, 93% winning trades. And it's not like 9 out of 10 winners. It's 223 winners and 17 losers over a 10-year period. And when I showed him this, we were back in like 2018, and it was right around the same. Still 90%. So what we decided to do, oh, by the way, over this same time period, the VectorVest composite is up 109%. So the market has doubled, but we obviously outperformed the market by quite a bit. So what we decided to do back in December of 2018 is we decided to put real money to this. Okay? And from December 3rd of 2018 all the way to current, it's up 28%. And I know I see the comments and questions coming in saying, why did it drop about 30% in March? That time there should have been no trades. Again, this trading system, this automated trading system that you see here, the exit criteria is slightly different. There were times when we didn't make any trades, but it went down because the stocks that we currently had then continued to fall. Okay? But we didn't replace them. If there weren't any stocks that met the criteria of a buy. Okay? So I know what you're seeing. You're saying, man, look at that drop. And you're probably going to ask in a moment, why didn't you get out? Why didn't you get out during that time period? The answer to that is when we set out to trade this in December of 2018, right out of the gate, we decided we weren't going to touch it. Okay? We were going to trade it exactly the way the research dictated. Meaning, we're not going to use any market timing. We're going to use the stock selection RSI2 system. We're going to use the exit criteria that's attached to this trading system. Again, I'll explain why I can't get into that in a moment. And we decided not to touch it. Why? Because there were times that the portfolio pulled back. This is a long pullback here, right? This is almost most of 2015. This isn't pretty to live through. This wasn't pretty in 2018 to live through. But what eventually happened after every one of those pullbacks? New highs. Now, we haven't quite gotten there yet, but we're on our way. Okay? So if we would have just gotten out because the market was going down, well, when do you get back in? That goes back to what I was saying earlier about arbitrary exit and entries. This is a system that explicitly tells you when you should be buying, what stocks you should be buying, when you should be selling. So the reason why we did not do anything and we left it completely hands-off during the February-March crash is because of the long-term results that we saw in that backtest. Okay, so up 28% since December 3rd of 2018, with 48 winning trades and 6 losing trades. And there was a cluster of about 5 losing trades in a row, practically in a row, during this time period. But for most of this run, we had like 1 losing trade. So let's look at the big picture here. Overall, from December 3rd of 2018 all the way to current, it's up 28%. Almost, we're getting there, almost back to new highs, with 88% winning trades, 48 winners and 6 losers. So what has the VectorVest composite done over that same time period? Okay, up 3%. Up 3%. So let's do the math. 28% gain when the market's up 3%. That's a 900%. That's 900% outperforming the market. All right, 3, 6, 9, 12, 15, 18, 21, 24, 27, almost 29. It's almost 900% that you're outperforming the overall market. And again, that includes this crash here in February and March. And our portfolio did drop, but it's almost recovered back to new highs. So you may be thinking, this is great. This is some really good stuff. I've never seen a trading system produce almost 90% winners. And neither have we up until now. But you're saying, well, I don't have time to look at all these charts, right? All these graphs, graph after graph each day to identify this setup. You're probably thinking, well, if I'm supposed to enter near the close of every day with this trading system, you'd have to spend a lot of time, right? All day long trying to find a handful of candidates. Well, what I'm about to tell you eliminates all of that time. No matter what we teach you here at VectorVest, we want you to be able to do it faster, smarter, and better. Okay? So just a couple of guesses as to why you're here today. You know, you heard that this webinar was called How to Trade Like the Pros. So you probably got a sense, okay, he's going to probably teach us something to do with how professional traders trade. So you want to learn from the best, right? You want to take emotion out of your trading. This might be something, guys, that's holding you back. You know, and maybe you're realizing that more now because you traded emotionally in February and March. Maybe you did have a plan, but you threw it out the window. Okay? And you also want more confidence that if you do go through drawdowns, 15%, 20%, and that's, I wouldn't say it's unusual, but it's less likely to happen unless something catastrophic happens with the overall market. If you have a really solid system in place and you got maybe a 10, 12% drawdown, that's kind of reasonable. That's kind of where you want to be. But these were unusual circumstances that we had to deal with in February and March, and a lot of portfolios went down 20+%. Okay, but the really, the solid professional traders, they knew that the systems that they had in place would eventually bounce back. You don't want to be the one that sells at the bottom, and a lot of people did, unfortunately. So right now, maybe you're not where you want to be. The obvious question is you're asking, this is some really good stuff here. How can I take my game to the next level? Well, you got a choice. You can do it alone, maybe take kind of bits and pieces of what I taught you here today, okay? Or kind of get right to the answers. So what we've done, Steve and I, is we've put together this 6-session webcast series. We call it Trade Like a Pro. We teach you techniques from 3 of the very best professional traders in the industry, Larry Connors included. You'll learn top trading strategies of the pros and how to quickly and easily identify the best trades. I hope you saw that if you learn to implement strategies like the one I showed you today, you will achieve the success you're looking for. Now, this is Hugh. Hugh is a recent graduate, maybe a year or so ago. He took our Trade Like a Pro course. He sent me an email not too long after the course was over. He said, I'm a retired financial services executive, so I had to unlearn what the quote street teaches to start making money. Before taking the Trade Like a Pro course, I found it was difficult to stick with a system since there were too many variables. I could never achieve the short-term trading success I sought. After taking the course, I began to see results right away. I now have a successful approach, and I'm much more disciplined with my trading. So let's talk about the modules. Let's talk about what you guys are going to learn here with this course. So module number 1 is all about correcting your mindset, or getting you in the proper mindset that this is a trading course. This is a swing trading course. A lot of technical analysis is being used in this course. Not a ton of fundamental valuation, although we do apply some of it. So Steve actually kicks things off in this module with how do the pros think. Talks about managing risk. A really important segment in module 1 is order entry. Then I come in and we talk about candlestick patterns. Okay, bullish and bearish reversal signals. Engulfings, haramis, crows, soldiers, things like that. 2-bar formations that identify changes in sentiment. They recognize turning points. We teach you the correct indicator to use and how you know that you're in the right trade. How do you know you got it right? Steve comes back in and teaches you what's called gaining the trader's edge. He teaches you that there are different types of market situations. There are trending markets. There are channeling markets. There are markets that hit extreme levels. And then he teaches you how to recognize those market situations and which indicator is ideally suited for each of those market situations. And then we get into the professionals' techniques. Steve teaches you 2 techniques. Well, one technique, called the Holy Grail. This was developed by a woman by the name of Linda Radke. She developed this system called the Holy Grail for both bullish and bearish markets. Steve teaches you this system. More importantly, he shows you how to quickly and easily find the setups. You don't have to look at chart after chart, and I'll explain how he's going to do that. In Module 5, I come in and talk to you about the 50-50 strategy and a strategy called AD Excellence. Excuse me. These were developed by Charles Schaap. I teach you his systems, okay, and then how to use the VectorVest program to find the stocks. And then we end off with, I think, the highlight of this course. In Module 6, by the way, guys, these are all pre-recorded modules. These are all modules that are in our new VectorVest University. And the great thing about the new university is these aren't going to be released one at a time like we did previously, right? When you guys bought a course in Digital Chalk, you know that if they were pre-recorded modules, we would release them once a week. We're not doing that here. It's almost like Netflix, where it's immediately available on demand. So after you purchase the course, and I'll talk about all that stuff in a moment, you get all 6 modules right away. You can watch them all right away if you wanted to. Okay? But we end the course with Larry Connor's systems. The RSI-2 trading system, I taught you that already, and another system that he's created called the RSI-25 strategy, which is for ETFs. You may be looking at it, for an ETF strategy, right? A system exclusively designed to trade ETFs. Well, he has developed that system, and I'm going to teach you that in Module 6. As a bonus, when you register for the Trade Like a Pro course, we are going to give you, via the new university, a course that I taught a little while back, a candlestick analysis course called Master the Art of Candlestick Analysis. It's a 6-session webcast series. You get 6 pre-recorded modules. You get 6 pre-recorded mastery sessions. Now, we used to sell this course for $995. We're going to give it to you as an added bonus when you register for the Trade Like a Pro course. Now, we touch a little bit in Module 2 on candlestick reversal patterns, but we're going to give you an entire course on it. Another graduate of one of our recent Trade Like a Pro courses, his name is Randy. He also sent me an email. He said, I'm a retired secondary school teacher of math and computer science. Excuse me. Ever since I was 13 years old, I followed the stock market. I'm now 67, and since retiring, I primarily day trade and swing trade both in the U.S. and Canadian markets. He said, prior to taking the Trade Like a Pro course, I had some success, but I always felt that my approach to trading was missing something, like a technique or a mindset? Does that sound familiar, right? I always struggled with entry and exit points, primarily exit points. Does that sound familiar? I thought if I didn't get a handle on this, my returns would remain stagnant. After the first module, I started trading the following week with more confidence and a more positive approach. Okay. He goes on to say, I feel my investment in this course will be returned many times over, and I'll be able to continue to enjoy spending 3 months with my wife each winter vacationing in Europe. So some other bonuses here. You're also going to get 6 live mastery support sessions. Steve and I will be conducting these. Okay, they'll be once a week. I'll show you when those will be conducted in a moment. Now, by the way, when you after you register for this course, I told you you're gonna get the 6 modules right up front, right? You're also gonna get the most recent mastery sessions that we did. I think it was in March. Okay, so you get the entire course right away. Now, just know that after Steve and I delivers these live mastery sessions, the old ones in the new university will be replaced with these new ones. So you get the old mastery sessions right away. But as part of registering for this upcoming course, we're going to provide 6 new live mastery support sessions. These are great. These will just help you what you learned in the module. We're going to take a look at what you're doing. You're going to get a homework assignment after each module. Okay, so we're going to be there every step of the way to guide you through the entire process. Also, if you don't already have VectorVest Real-Time, we're going to give it to you for 60 days. It's basically the duration of the course starting from now. 60 days access to VectorVest Real-Time. That comes included with Pro Trader searches and the auto timer as well. Okay, so if you don't already have Real-Time, if you already have Real-Time, you already have it. We don't extend your subscription out at all, but if you don't have Real-Time, we give it to you as an added bonus as part of this course. And another bonus, this is probably my favorite session because this is a live trading session. This is essentially Module 7, but it's going to be a live session. By the way, once you register, you get to see the old live session right away. If you go into our new university after you register, you'll see all the modules, all the homework assignments from the past, all the mastery sessions from the past. You'll also see the most recent live trading session that I did back in March as well. But for you guys, we're going to do a new live one. So this is going to be kind of wrapping everything up. It's going to be a Tuesday morning. We're going to come in. We're going to start at 8:30 a.m. Eastern Time, and we're going to go through everything from market analysis. What's the market doing? Are we bullish? Are we bearish? If we're bullish, let's look for the trades that we taught. Okay, and I'm kind of getting ahead of myself, but if we're bullish, let's run scans. And a bonus here is also, this is huge. You guys were asking, I think, somebody was asking about the RSI2 scan. Exclusively for workshop attendees, you will receive pre-built searches that will make finding your trades a breeze, including the RSI2 search. You'll get the RSI2, you get the RSI25, you'll get the Holy Grail bullish and bearish, you'll get the 50-50 and the AD Excellent scans. Okay? You're probably wondering, right? Okay, they teach us these techniques, but how are we going to find the trades? I've already done the legwork. I built these scans to quickly and easily find the best candidates to trade. And they'll be inserted into your programs. You don't have to build them yourselves. They'll be inserted right into your VectorVest programs. Another bonus, you're going to get this trading system. I said earlier that I can't go into in depth the exit criteria that I used here. It's because it's exclusively given to those who register for the course. You're going to get this automated system. Automated system of trading a variation of the RSI2 trading system that you've already learned, that I'll go into more detail during the course. But you'll get this trading system that from December 3rd of 2018 all the way to current, it's up 28%. With 88 winning trades, and that's 48 winners and 6 losing trades. Remember, the market has only gone up 3% over that same time period. Okay? Most importantly, you're going to get as close to hands-on training as possible, both by both myself and Steve Chappell. Okay, Steve and I will be manning the chat rooms during the mastery session, so you can ask questions throughout the course. Now, the normal price of this course is $29.95, but we still do. We currently have an early bird rate available of $2,495. But I want you guys to forget that because, I always like to reward people who take the time out to come to these webinars. If you order before the end of today's webinar, and I'm going to stick around for a few more minutes to answer some questions, I'm also going to put the slides in the handout section of your GoToMeeting control panel. Somebody was asking for them. Give me a moment while I find them. Where is it? Where is it? But if you go to that website, I'm going to ask Steve to type in that website that you see at the bottom there. It's www.vectorvest.com/TLP. Again, I'm going to stick around for a few more minutes, but if you order before the end of today's webinar, I'm going to knock an extra $200 off the early bird rate of $24.95. So you don't have to pay $29.95. You don't even have to pay $24.95. It's $22.95. You get the 6 pre-recorded modules. You'll get the 6 live mastery support sessions. You'll get the RSI2 trading system, the automated system, the pre-built scans, and real time for 60 days. Okay? Thank you, Steve. I appreciate that. You guys should see that now in your chat box, www.vectorvest.com/TLP. Okay? I'm trying to find, guys, oh, there it is. Hold on. Give me a moment while I try to find that PDF. And I'm going to put it in your handout section of your GoToMeeting control panel in a moment. Okay? Here are the dates for the live mastery sessions. They begin, what's today? Today's the 8th. They begin 3 weeks from today, actually. Our first live mastery session is the 29th of July. That's a Wednesday. And they will continue each Wednesday for the next 5 weeks. Those sessions begin at 2 p.m. Eastern Time. Okay? And again, the last live mastery session will be on Wednesday, September 9th. And our live trading session will be Tuesday. I'm sorry, it should be Tuesday the 15th, not Tuesday the 8th. I apologize for that. It should be Tuesday the 15th. That will be the live trading session. Okay? And again, that session begins at 8:30 a.m. Eastern Time. We start an hour before the market opens. All right, give me one moment here. I'm going to find them for you. There it is. Okay. All right, so in the handout section of your GoToMeeting control panel, you should see right now, no, not quite. It's downloading. It'll say, okay, it'll say TLP. It's a PDF. Those are the slides that I used here today. Okay. All right, I'm going to stick around and answer a couple of questions here before I break. But remember, go to www.vectorvest.com/TLP. That $22.95 rate really was only available for a little while longer. If you guys are watching this via recording, or let me say this, you will all get this recording sometime later this evening. Okay? All right. Peter says, yes, I understand, but would not using the stock price dropping below the 200-day moving average show you when to not trade the system and consequently prevent the huge drawdowns? So, Peter, it may, but there's no way to automate it. So that automated system that I showed you was created within the confines of what VectorVest Backtester has. So if you want to adjust that, you can. I don't know how in the long term that's gonna go for you, because I can't backtest it. Okay, so I see what you're saying. Not replacing when the market's below its 200-day moving average. That sounds like a good idea, right? But again, there's just no way to automate that. Okay. Stuart's asking how to pay. Go to that website, Stuart. www.vectorvest.com/TLP. And the rest is self-explanatory from that point. Okay. Question, so this RSI2 will not work in a bear market, correct? We have in the VectorVest, in your Unisearch tool, you will get a search for the RSI2 bearish setup. And I teach you that in Module 6 as well. Excuse me. You just flip it over. Price below the 200-day moving average, but the price is above the 5-day moving average, and the 2-period RSI is above 90. You know, so we're not in a bear market anymore, right? Technically speaking. Go back just to confirm that. Yeah, we are, okay, case 7 bear market scenario still. But right now what's happening is the market has climbed above the 200-day moving average. And prices are above the 200-day moving average. So you wouldn't be trading any bearish stocks. But we teach you the bearish system. I haven't developed an automated way to trade the bearish system, but we teach you the bearish system as well. Dolores asking, how do you set up 2-period RSI below 10 in VectorVest? We'll teach you how to do that, Dolores, during the course. And it says, how many trades are you in at a time for most of the time? That's kind of up to you. With the RSI2 system, the RSI2 automated system holds 5 stocks. It maintains 5 stocks, no more than 5. So that's that particular system. With the other systems, there's no portfolio size. It's, do I have an ideal setup? And if I do, then I'll take the trade. You know, I don't want to buy more than 10. You know, I can buy a couple of Holy Grails. I could buy a couple of 50-50s, a couple of 80 Excellents, but I don't want to fill my portfolio with 15, 20 of these setups. So it's up to you really how many stocks you want to hold when it comes to all of these other trading systems. But the RSI2, it holds 5 stocks. And that's an automated, again, that's that automated way to do it. Okay. Yeah, so Dolores also asked about the 2-period RSI below 10. How do you do that? Also what you'll get, guys, you'll get cheat sheets, okay, on how to set up graphs, how to, for the candlestick portion, Module 2, there is a portion where, you know, there's a part of Module 2 where I talk about adding stochastics to each candlestick reversal search. You'll get cheat sheets on how to do all that. Okay, and that's also within the new university as well. Franklin's asking, will the live sessions be recorded? I have a conflict with a couple of dates. Yes, they will be recorded and they will be uploaded to the new university, to the course within 24 hours. Okay. All right, guys. Any other questions before I wrap things up? My email address, by the way, is Jerry D. That's Jerry, D as in David, at VectorVest.com. If I didn't get to your question, I'm sorry. I'm running a little long here, so if I didn't get to your question, I apologize. But shoot me an email if you have a question about the course. If you're thinking about signing up, you want more clarification on something, again, it's Jerry D, Jerry, D as in David, at VectorVest.com. All right, guys, on behalf of Steve, I look forward to working with you. We love this course. This is Steve and I's favorite course to teach. We've said it 1,000 times. We love this course so much, so we look forward to working with you guys, and we'll see everybody at the first live mastery session, again, 3 weeks from today. Take care, everybody. Have a great day.